Hey everyone. Many investors were worried during the week of 23rd March when liquid mutual funds started giving negative returns, which is extremely rare. These negative returns lasted for about 4 to 5 days, and since 27th March, after the RBI rate cut announcement, it has once again started becoming steady. In fact, the returns were not small for the week ending 1st April. For that 1 week, most liquid mutual funds gave upwards of 20% per annum. Even after the negative return days, monthly average of liquid mutual funds for the month of March 2020 is above 6.5% for most liquid mutual funds. So why did liquid mutual funds give negative returns for those 5 days? Liquid funds invest in 90-day deposits or high quality bonds. And typically, liquid funds are used by big corporates to park their surplus money. Due to a lot of business pressures, these corporates withdrew large sums from the liquid funds. Normally, fund manager will be easily able to liquidate his short-term bonds or short-term deposits and pay off the corporates. In parallel, there was another interesting situation that was developing. Everyone expected RBI to cut the interest rates, and that was getting delayed. Whenever there is an expectation of a rate cut, the investors who have the money, they start buying long-term bonds to block the interest rates before the cut. And since the fall was expected to be very steep, no one was buying the short-term deposits from the mutual fund managers. As expected, RBI announced a big rate cut of 0.75%, which everyone was awaiting for more than 10 days. Once the rate cut was announced, the long-term bonds lost their attractiveness and investors started going back to liquid funds. Now, fund managers are easily able to sell their short-term deposits, which were bought 90 days ago, at a higher interest rate. So liquid funds finally wiped out all the negative returns they suffered for the 5 days and ended the month of March 2020 with a healthy 6.5% per annum. Though the returns are expected to fall by about 0.75% for the next month, right now they are back to providing safe and steady returns for the investors. Investors who want to park their money for 90 days or so for their emergency needs can expect liquid funds to provide slightly better returns than savings bank account or 3-month FDs. Keep writing to us on Twitter or on Facebook. Thank you for this question.